Hello, my name is Steve Bigelow with the Candlestick Forum. Market still very indecisive. As we saw, the Dow yesterday, what is today? Yesterday broke down below the T line. Remember, we said it was getting very indecisive up here after this range of indecisive trading. Bunch of dojis, stochastics starting to roll over, that we could expect it to move either way, to have both long and short positions in the portfolio. Well, you can see where they moved it, right back to the obvious, the 50-day moving average. Today, they brought it back up, doing a Harami, bullish Harami. However, they traded well back below the T-line, and your stochastics are heading down. That would imply we're probably going to be chopping sideways for a while, waiting for the stochastics to get in the oversold area. Same scenario over here on the NASDAQ. Things were rolling over. We had the long-legged doji up here. That was signs that the sellers are starting to take control. Little bearish engulfing, gap down on Wednesday. They couldn't get it back up above the T-line yesterday, or today, I'm sorry. Still tells us there's lots of doubt in this market. So this is where the rare research analysis, reverse engineering comes in handy. Trying to find where the strong prices or the strong sectors and which sectors have the strongest price moves. That's said the wrong way. Which stocks in that sector is having the strongest price moves. So we've seen a few of these where they came out, they had news, and they were popped up big time. But we're right in the middle of another conundrum here in the markets. GameStop on the short squeeze with Robinhood and Reddick coming out of the $20 range, going to $500. You had people saying, should we be buying here? This is what you call the greater fool theory. If you're buying here, where do you think it's going to? Right now, they can't tell where it's going to. It had a range of 400 points today. So no technical analysis, no fundamental reason for knowing what to do with this stock other than it's a short squeeze. What we want to concentrate on is the patterns. The fry pan bottoms have had very strong breakout moves this past week, making some very huge profits. But that's not the only application for candlestick analysis. Not only does it give you high probability pattern breakout setups, but it gives you signals that tells you long-legged doji, indecision, get ready for profit taking. And there's a very simple doji rule. If it opens lower the next day, start taking profits. And because we have the T-line, we know that if you had a big candlestick sell signal this far away from the T-line in the overbought area, and we do the doji rule and it opens lower, you take profits because we can kind of suspect where the next target's going to be. This is not rocket science. Investor sentiment works the same way time after time, and the signals illustrated by the Japanese rice traders over hundreds of years of analyzing the signals that are created by investor sentiment can give you situations that create a high probability reversal situations. Whether you're trading small stocks or Apple, the doji rule still applies. Indecision up here in the overbought area. So this is the one thing that we wanted to point out. This past week, or the past couple weeks, the fry pan bottom breakouts have produced inordinate profits. This stock went from the $5, $7, $8 range, hit as high as 23. So we're looking at things that give us the high probability results. We recommended BCLI because of the fry pan bottom and notice where it broke out, right as the pattern started, and at the 50-day moving average. Where do you think everybody and their brother's watching to see if it's going to break out? At the 50-day moving average. This is what we call 2+2 analysis. We know what should happen coming out of a pattern, and we can see that it's happening at the beginning of the pattern, which is where our breakout will occur, and it's occurring at a breakout level that everybody is watching. Just increases your probabilities of not only being in the right place at the right time, but the magnitude of the move of these breakouts are extremely strong. So right now, this market has no direction. So your best trade setups are patterns that you recognize that aren't going to be influenced by what the overall general market is doing. We're going to be doing a training session this Saturday, January 30th. It's usually a 1 to 1.5 hour training session on how to use the RARE system, the research analysis reverse engineering, that when we see a breakout based upon the visual aspects of candlestick signals, all we really do is go back and see what caused that breakout to see whether the analysis of the breakout and the relevance of the news is going to continue your uptrend. Not rocket science, just simple logic. That'll be it. We'll see you in the chat rooms.